You have probably been told before something along the lines of, if you can't see the liquidity, then you are the liquidity. Well, here comes Arjo again. What do you mean with that liquidity? Define it. If you can understand liquidity in combination with the fair value gaps, you understand the whole market. And making money becomes quite simple once you understand the market. Just a heads up, we have a holidays deal for the money making team that is announced at the end of this video. We need to understand that the theory we use is based around liquidity and rebalancing. So the market is either doing one of two things. It's either seeking liquidity or it's rebalancing something. In other words, it's seeking fair value or it's seeking liquidity. Again, that is based on a theory that we use. That theory is just there to make me comfortable. Do I know 100% that that theory is true? No, because who am I to tell you that? Nobody knows. But it makes me money, so I want to use it. Then if we define that liquidity, liquidity is again defined by having buy orders and sell orders in the market. Those are the only two orders. Then for someone to be a buyer, so someone that wants to actually buy price, there needs to be an opposite seller. Of course, when you want to buy a car, someone needs to sell you that car, right? You can't just buy it out of thin air. And it's the same for when you want to sell something. Someone else needs to buy it from you. So understanding that and understanding that there are huge players in this game. With huge players, I don't mean the gurus you are seeing on Instagram, Twitter, YouTube, whatever it is. Because the true whales are the financial institutions. They are trading with an unfathomable amount of money. And they are not taking out your average Joe that is in his basement trying to trade the next 90-minute cycle. Oh, what would happen if he figures out the algorithm with his 2 lots? No, that's not relevant. We are talking about financial institutions, about the actual big boys. So let's see how that actually goes to work. Well, if we look at price action right here and we see this low right there, that low got taken out right there, got swept, and then we moved higher aggressively. What is the story behind that? How can we dissect this? Well, first of all, we need to understand there were likely stop losses below that low. So someone was buying here, we're just holding it to the moon right there. And when I say someone, again, I refer to financial institutions. They had their stop loss somewhere below those recent swing lows. Understanding that is that right there, this low was a target. Why was that exact low a target? That will make a lot of sense if you keep on watching the video. Then that stop loss that they had is a sell order. Because, of course, they are selling at a loss. So a buy stop loss is a sell stop. Meaning that if price comes below the stop loss number right there and stings below it, they are selling at a loss. But what did I just tell you about the car analogy? If they are selling, who are they selling to? They are selling to someone that doesn't want to see them win. Or they just don't simply understand what I'm about to say. But I doubt that financial institutions are watching my videos. They are selling to someone that is above them. That sell stop is getting bought up by an even bigger whale. An even bigger financial institution. So below this low, there are sell stops. Sell stops in the form of stop losses. But not only that, because there are also breakout traders in the market. Breakout traders that have a sell stop in the form of an actual sell order and not a stop loss of a buy order that want to sell below that low. Why is that? Because they're selling on weakness. And this is where it gets very important to understand. Because these people are selling on weakness. So again, they will have their stop loss somewhere above recent swing highs. Can be even the highest swing high that is sitting right there. In their mind, since price is coming below that low, it should be weak, right? So we should continue lower. So we want to place a sell stop right there. And we want to capitalize on the potential move even lower. So this sell stop, again, needs to have a buyer. That sell stop is getting bought up again. Now, the important part here is that this sell stop right there, the person that is trying to sell that is what? Is now trapped. It's experiencing drawdown. This person wants to get out of this position. If you're in that kind of drawdown, with an unfathomable amount of money on the line. You want to at least mitigate that position, right? At least get back to break even. So if we understand the theory right there, and we understand that there's a bigger player in the game that wants to suffocate this person's position to their own benefit, then this person in that sell stop position should not get released. Why to that other, the bigger player, to their benefit? Because they are just switching positions. They are doing the opposite of what this sell stop, this breakout trader was doing. Because with the sell stop right there, the other person got filled on a buy. With this stop loss right there, that is what? That is a buy stop. Which means the person that was in the buy position right there, their take profit is above that high. And that is a sell order. So there they are again exchanging each other. The person that has taken the loss is buying to position back from the person that just won with their take profit being hit right there. So let's take a look at a few more. So if we build on to this exact idea, then on the 5-minute time frame, what can we see? We can see that we are taking swing lows right there. And specifically, I've marked out this swing low. We take that swing low before we do what? Before we move higher. And if we look a bit higher, we are taking this swing low right there before we have a major move higher again. And then what do we see even higher? We are taking out this specific swing low right there before again we are moving higher. That is very interesting, right? Well, what if I tell you a secret right now? That all these swing lows that I have marked out right there and the whole liquidity story that I just told you are just part of my rebalancing story. Because if we zoom out back to the 1 hour time frame, that right here, the low that I marked out on the 5-minute is what? This is a fair value gap. That is a fair value gap. That small tiny trend line right there is also part of a fair value gap right there. And let me tell you even more, because the low I had marked out to the left right there. Why that specific low? Because if we go into the weekly time frame, then what is that low? On the weekly time frame, it's a fair value gap. So what have we just gone over? The market either does one of two things: taking liquidity or rebalancing something. So offering fair value or taking liquidity. What if I tell you that these two things are the exact same thing? Take notes on what I'm about to say. If we are rebalancing something on the higher time frame, that means that on the lower time frame, we are taking liquidity. So Ario, you're basically telling me that it's almost the same thing? Yes, correct. Which leads me again to the same point that I made in the previous video. One of them is irrelevant. And which one do you think is easier to recognize? As in, do you think it's easier to spot out this weekly fair value gap right there? Or do you think it's easier, if we go back into the 1 hour, and think, this exact low right there is going to get swept? Yes, but it has equal lows, so we knew it was going to get swept. All right, well, why did these equal lows right there then not get swept? So the differentiator is, again, the fair value gap. Now, again, this is not a video where I'm just trying to prove you, fair value gaps are everything. I need to get my right. No. I'm trying to learn you something here. Because we have now marked out this weekly fair value gap right there in the form of that line. Then if we look at the daily time frame, on the daily time frame, we can see that we have this fair value gap sitting right there. That daily fair value gap on the 1 hour time frame gets traded into right there. So that daily fair value gap and now the liquidity plus the fair value gaps, which arguably could be the same thing, are now telling us a story. Remember what we had, because right there in that fair value gap, we can tell the exact same thing. First of all, we can tell that we again have buy stop orders right there above that high. We also have sellers right there. We have sellers potentially getting in on this move lower already. So the liquidity story, we can use the exact same thing, as in this buy stop right there. If we want to continue lower, and we know buy stops have their stop loss below recent swing lows right there. And we try to push lower. And then we come back above that entry. After that first fair value gap lower right there. That doesn't make a lot of sense, right? Because what are we doing? We are releasing orders right there. We are allowing people to go break even, to mitigate that position. No, we want to suffocate their position and not allow them to go break even, to mitigate that position. So that is the first sign liquidity-wise that is very suspicious. But what do I say? That the fair value gaps are telling you everything you need to know right there. Why is that? Because the fair value gap, that daily fair value gap, we are getting a new 1 hour fair value gap lower off of that. What is the market doing? It's either rebalancing or taking liquidity, like we mentioned, right? So what is that rebalancing? That rebalancing is offering fair value. The daily fair value gap is where we didn't have fair value just yet. So we only had sell side right there. Now we need to offer some buy side right there to then potentially continue lower. So there we can see that price is trying to push lower. And off of this fair value gap right there, the 1 hour fair value gap, we are now doing what? We are not creating a new fair value gap lower. So the lack of that new fair value gap being created tells us something, which means that now we are coming into this fair value gap for the second time right there. Remember the fair value gap hidden secrets video? If a fair value gap is being traded into twice, in other words, there's a lack of displacement, of new displacement. There's a lack of intention. It's not strong enough to push price lower. What do I mean by that? And what is the why behind that? The why behind that is because the first time it already offered fair value. And you can see that through the lens of, again, that liquidity and that fair value perspective, that rebalancing perspective. So since we already rebalanced that, why should it come into it a second time if it's already rebalanced right now? Why are we releasing those trapped traders? So that right there is what? It's a sign. That right there is the sign that we do want to continue higher. And this daily fair value gap is also the last daily fair value gap that we need to overcome to then push price higher towards this high right there. Because that is the only premium array on the daily time frame that we are encountering to potentially push price lower. So again, the no resistance video is that if we overcome this fair value gap, then we have an easy path towards that high. Which means that, again, if the market is rebalancing or taking liquidity, it's either doing one of two things. And it didn't rebalance this. And there's nothing to rebalance above that. So if we go into the daily time frame, then we can see that on the daily time frame, we had this daily fair value gap. There's nothing to rebalance above it. Then what is it doing? It's taking liquidity. What is the liquidity? That swing high. So if we then go back into the 1 hour time frame, then the 1 hour time frame is first of all telling us, okay, we have some bearish fair value gaps. Now at that moment in time, this is almost during Asia. So that's not something you would trade, right? You wait for the kill zone. You wait for the kill zone right there. Fair value gap. That fair value gap with the same premise, we can go into the 1 minute time frame and or the 5 minute time frame. So here we are on the 5 minute time frame, and this was that 1 hour fair value gap. This was the daily fair value gap right there. Then this 1 hour fair value gap is now doing what? Based on the fair value theory and based on liquidity theory. And then this, very simple, your ST right there, that is your entry. And what can we also see on the 1 hour again? It's reading those fair value gaps, because on the 1 hour, we saw this 1 hour fair value gap right there failed to do what? Failed to push price lower. But the deeper rooted reason is that it already offered fair value in that 1 hour fair value gap, and it did not push price lower, creating a new fair value gap off of that. So there's no reason to come back above here other than to continue higher overall, following through on the overall weekly fair value gap that we had, which created this weekly context from that discount array to that premium array. So understanding where we are offering fair value, why we are offering fair value right there, why are we coming back into a certain fair value gap, why are we releasing trapped traders, that in itself helps you a lot to get to your bias. And again, it can be done everywhere. Why are we sweeping this low right there? Very simple, zoom out. If you zoom out, it's just a 4 hour fair value gap. Offering fair value, rebalancing on the higher time frame is a liquidity sweep on the lower time frame. So the fair value gaps here were again responsible for our bias, narrative, entry pattern, everything. And then the liquidity theory that we had and the fair value theory that we also had is a confluence, is what we can build on, is how we can use those arguments. All right, we are releasing bullish trapped traders. Okay, that's a bullish argument, right? Because that should not happen if we are overall bearish. We have already offered fair value on this bearish daily fair value gap, and we are coming back into it again. Hey, all right, that is another bullish argument that we can add to the overall argument. Because if we're bearish, that should not happen. This is how you create a logical story from it. There's no secrets in this. Sometimes all it takes is logic and understanding the system. To hack a system, you first need to fully understand the system. So understanding fair value gaps here will allow you to understand which liquidity will be targeted. Because this weekly fair value gap that we had at the bottom right there is not just something you can trade off of. All this price action in the fair value gaps lower right there, 1, 2, 3, 4 that got traded into and pushed price lower. And if you were able to capitalize on one of those fair value gaps, sorry, five actually, before we delivered into the weekly fair value gap, if you are able to capitalize on even the last one, then you are doing a fantastic job. And you knew exactly which low, which liquidity was the target. And this is again how you use liquidity plus fair value gaps to make your money. So now, since we are approaching the holidays season and a new enrollment is currently starting for the money making team, I think it's the right time to present the deal. Next enrollment, so this enrollment that is currently going on, will consist of more videos than previous enrollments, which means more value for the same exact amount of money. Since you are, of course, receiving more videos, more value, it means you are probably going to need some more time, right? You're probably going to need a few extra days to process it all. So everyone that is a member of the money making team, and that is the essentials plus the masterclass monthly options, will get a whole week, 7 days for free added onto your subscription. Meaning that your first month, or if you were already a member, will be 5 weeks instead of 4. And it's the last enrollment that we will have the same prices. Afterwards, due to demand and due to the amount of hours of content and the amount of value inside the membership, the price will simply increase. And that will happen in the beginning of 2024. Now, the best way you can thank me, and again, that can all be done through my free YouTube here, is by getting funded and making more money than you invested. Having a great ROI. That's our goal here. And that is very doable. Again, link in the description to sign up for the money making team. It's on wap.com/ROIO. And then I want to thank you, and I'll see you tomorrow on Sunday at the weekly forecast, of course, 8:30 a.m. New York local time. All right, perfect. Love you. Thank you.